I'm Ben Willis, Director of Floor Operations for Sunrise Securities on the floor of the New York Stock Exchange. No, I'm not the governor of the state of New Jersey, even though I may look like him. I'm here to talk about the events of this trading week that we've managed to just survive. I've been plying my trade down here for 25 years, and this was one of the more remarkable weeks we've ever endured. The volatility, the market moves up and down, will remind you of a roller coaster ride if you've been watching your investments. This has been a market that's been driven by fear in both directions. Fear to the downside and wondering what was going on basically in Europe, not so much here in the United States, but that goes to show you the connectivity of and the interplay of the markets around the world. So when we had concerns going on in the world about in particular France and some of their banking systems, we dropped dramatically. Some of those fears again were put aside. We had some positive economic data coming in from not only again Europe but the United States of America as far as retail sales and jobless claims. All that came together to create this whipsaw, which is a term we use for the market moving back and forth in very dramatic, quick movements. It can be very frightening, but I have to tell you, I believe this is a kind of market that an investor stands the opportunity to make real money if they keep their wits about them. This is the time when markets trade off like this. It's an opportunity for an investor to buy the shares that they may already own at probably a higher price. An old friend of mine, a colleague, a former customer, used to run a little fund called Magellan Fund up in Boston. He wrote a book called One Up on Wall Street. And back then, he wrote in his book that you pick the stocks to buy that you know, companies that do business you're familiar with. And when you buy them, you save a little money to buy them when they get cheaper. And that was what you had happen this week. You had the opportunity to add to your portfolios of stocks that you may have owned at a higher price. We call it averaging down, but it's taking advantage of those dips if you're a holder long term. So you had companies in America that went on sale. If something went on sale at Macy's, you'd be grabbing them off the racks. That's what happened to stocks today. That's what happened throughout the week. And that's why you need to be at the ready to get involved in a market that has these kind of gyrations. So when they swing down the way they do, that's an opportunity for the investor to make the trade. And that's not what we do professionally down here. We're more interested in the intraday, very short movements during the day. But for an investor, that's when you keep an eye on what's going on, and when you see us talking on television in different places, you need to get on your computer or to your phone and say, I'd like to buy those great companies I see trading on the New York Stock Exchange and add them to my portfolio. And that's the trade. I'm Ben Willis for Sunrise Securities. Thank you.